Hi, everyone. Great to see you all, and looking forward to giving you this presentation today. About 6 years ago, I gave a presentation with exactly the same title. You're using AI to predict venture investment outcomes. And that was a theoretical presentation. That was what we were planning to do. And today, for the first time, we're actually going to reveal some of the results of what we've learned from over 400 investments that we've made using AI. So stick around to the end of the presentation. It's only a 10-minute presentation, but look forward to showing you what that is. By the way, my partner, Dan Hooktup, can't be here today. He's based out of Florida, so it's a pretty long flight for him. But Dan is the brain behind this AI, so no difficult questions for me, please. Okay, a bit about us. So we're considered to be a leader now in the space. I think it's mainly because we've been doing it for a very long time. But we're recently put into a list of the top 20 data-driven VCs globally. We're the only non-US company that's on that list, so we're quite proud of that. My main thing is working on process automation. So Dan focuses on AI, I focus on process automation. And by process automation, I mean taking the world of investment that is largely very, very manual and automating it so that we can do 400 investments with 2 people, which is essentially what we've done with the H2 fund. This is the platform that we've built over the last 8 years. It's the only platform of its type in the world. What we've created is basically a centralized data layer that sits at the bottom of a VC or an investment bank or a private credit company or anyone that uses our platform, and enables you to plug in various capabilities. And in the top right-hand side, you'll notice that one of those capabilities involves doing AI on incoming investments. And we have a whole bunch of VCs and accelerators who we work with around the world to do that. We've got something like 606,000 companies in our database now, so we've done a lot of analysis. I'll get to that in a second. But what we're able to do when a new company comes in, if you've got a new idea and you're an entrepreneur, you can apply through our platform, you can apply for funding from any of the VCs and accelerators that we work with, and we can give you a readout on how good we think your business plan is, your pitch deck is, your overall elevator pitch, and we feed that out back to you on the spot. What we're trying to do is help you as founders elevate your story so that you can engage with investors more successfully. That helps us as investors because if you're telling your story more coherently, more completely, that's great for us as investors too. So everybody wins. So I'm not going to spend a lot of time on this other than letting you know that we're kind of a best-of-breed platform, the only one of its type that acts like an iPhone in this space. You can plug in different kinds of modules. I was just meeting yesterday with a bunch of private credit guys in Sydney. We have a fantastic private credit a module that we have on the platform that enables you to manage those kind of funds. But VC is really where we started, so I'm going to focus on that. All right, so what does our research tell us? We've looked at pretty much every venture deal for the last 20 years in venture capital from around the world. And that sounds like a really crazy statement, but it's kind of true. And when we started doing this, we really didn't know what we should look at. So we looked at everything. And what we discovered is a lot of the data was very dirty. It needed to be cleaned up, needed to be analyzed in ways that we could understand some broader trends. And after doing that, we ended up with about 600,000 deals that we could analyze. What that tells us is some super interesting things. And the graph that you see on the left, that is a graph of actual venture capital company cash-on-cash returns over 10 years. A lot of sophisticated investors in this audience. That is what happens when you invest money in venture capital. About 50% of it ends up doing the same or less than NASDAQ, in which case you're trading a fairly liquid investment for a fairly unliquid investment. And then 50% of it ends up doing better than NASDAQ, and 25% of it ends up doing incredible returns. And that's what attracts all of us to this space. And so the core question that Dan and I were trying to answer is, how do we get in that top percentile? What are the key characteristics of investing in venture that it would enable us to get 3x or better returns and be in that top quartile? So that's really what all of our research was in service to. Just a couple other things on this graph here. You see on the right-hand side here, this is a graph of returns, exit returns mapped according to the stage at which you invest. A lot of people hold off investing until the company's cash flow positive and then it's Series B or Series C. we actually think that's not the best strategy, and the research proves it. What you can see here is that the best strategy is to get in really, really early and do a lot of investments, because what these three charts are telling you is don't invest in 3 things, invest in 33 things, or preferably 333 things. Invest as early as you can, and definitely invest before or on Series A. What does our AI do? So when you submit your business plan to us, our AI can do an instant valuation analysis. Why? Because we've got 606,000 companies that we've analysed their value of. And so if you have a vertical farming company in Raleigh-Durham, we know that that company is worth $6.4 million at seed stage because we have hundreds of other vertical farming companies that we can compare it to. This is great for investors because if you're using our platform, you can have an argument with a founder that doesn't involve you versus the founder. It involves the founder versus 660 or 606,000 other companies, which is a very powerful argument. You're basically saying, look, this is the entire world analyzed here. The other stuff that we do here is you'll see a graph there on the immediate right. This is how well our AI predicts follow-on funding, and it predicts it brilliantly. And I'm going to show you a bit more about that in a second when I wrap up with the big reveal. This is what I was talking about there with evaluation. This is what our platform looks like in one incarnation of it. It's white label. It all runs on microservices and APIs. Anyone can use it. So as I mentioned, we started doing this about 8 years ago, and we've learned a lot during that 8 years. And what we've found is that the models that we started building about 6 years ago after the first 2 years of initial research are generating significant lift. What is lift? Lift is a data science term. So lift means basically if your model is showing positive lift, it means that your model is working a lot better than a model based on random choices. So what does that mean if you're getting positive lift? What it means is we can directly compare the results of a random set of investments with the results of what we're seeing. And what you can immediately see from here is that our models are doing a pretty darn good job of predicting follow-on investments, IPOs, and acquisitions. And the lift that you're seeing in some cases is 5, 8, or almost 10x, which is incredible. So what you're seeing here is something that's not been shared before. When we started doing this, we were the outsiders. We were the guys that believed that AI could work for venture investing. Everyone thought we were crazy. And now 8 years on, we actually have some really solid data that shows not only are we not crazy, we actually have some hard data that shows that you can apply artificial intelligence and all the billions of data points that it's able to unravel in a way that can provide really solid guidance to you as investors. By the way, we're not competitive with what Steve does and what Wholesale Investor does. We're really good buddies with them. We don't do capital raising. We run our own fund and we license our technology to other investors, family offices, people that want to run our own fund. It's not expensive. Starts at around $299 to $599 US a month. And you can get a lot of benefit from this. A lot of family offices use this instead of trying to find those very hard to find analysts that they would love to employ. Okay, what does this mean in terms of AI versus humans? So what we've discovered is that after this time, it's proving to be really, really helpful to us. And whenever I present on this around the world, people always go, the question that always comes up is, well, what about the humans? Are you going to put a whole bunch of venture capital guys out of work? No. And we're not going to put a whole bunch of people out of work full stop, because what we see when we look across all the 400 companies we've invested in is that most of the activities at those companies involve human-to-human interactions, and they're going to involve human-to-human interactions for a long, long time to come. Pretty much everything on this list here is a human interaction that has to happen between a founder and an investor, or between a salesperson and a customer, between a product developer and a marketing person. And so we don't see AI intruding a lot on the human-to-human interactions for decades, to be honest, but we do see it, as you saw from the data I just shared, we do see it providing some really fantastic help and assistance to us as investors when we're making decisions. So thank you very much, and I hope that was useful.